Happy Monday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Monday, February 5th, 2024. As always, we'll start with our executive summary from today's leadoff morning note. If you would like the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So we'll start with today's key macro event, which is Powell doubled down on delayed rate cuts, plus more evidence of green shoots globally. So the nuance there is that Fed Chair Jerome Powell appeared on 60 Minutes Sunday to reiterate that it was too soon for the Fed to begin cutting rates in March. Elsewhere, the first batch of composite PMI data from around the world were supportive of our green shoots globally theme. Accelerating month over month were Australia, Japan, India, Spain, Italy, Eurozone, and UK, and Brazil. Only China, Russia, France, and Germany declined month over month. In terms of market implications, Powell also confirmed that the Fed is not going to factor the election into their decision-making process, which means a delayed start to policy rate easing is unlikely to prevent them from making the necessary adjustments to monetary policy. The institution's ability to block out political noise is critical because the Fed policy is likely to be a hot-button issue on the campaign trail this spring, summer, and fall. Elsewhere, the positive global liquidity impulse is being driven in part by animal spirits due to green shoots globally and China front-loading stimulus early in the calendar year. Today's improving global growth data supports that legacy uptrend. Transitioning to our 42 Macro dashboard here. We'll start with a question from our 42 Macro Aware community. It reads, thanks, Darius. First of all, very happy to join you. Request, please. Can we expect NFP? Is there a way to expect NFP? Are there any prior indicators and reports that tell us that what the non-farm payrolls will be released positive or negative before it's released? So the answer is yes and no. Not with any specificity. The NFP is all the models I've built to sort of forecast NFP with specificity have too big of a forecast error to rely on that, and that's pretty much the general consensus around global Wall Street. But there are leading survey-based data that can give you an indication on whether or not the NFP is likely to be strong or not so strong or weak, et cetera, et cetera. And so some of those indicators that we track and are monitoring monthly are the data points that we receive. Obviously, we get the ISM data, the composite PMI, the PMI data that we get, the flash PMI data we get in the month prior, the consumer confidence readings from the University of Michigan and its conference board measures also have employment statistics in there that can give us somewhat of an indication. But generally speaking, if you're trying to play pin the tail on the donkey on NFP as your investment process, you're going to have very, very poor results relative to people who are doing things that we are doing in terms of helping investors take advantage of momentum in asset markets. Number two, how do you measure growth, productivity trend, and liquidity? So that's a very, very complicated question, which we obviously spend the next 4 or 5 hours talking about. But generally speaking, how we think about growth specifically is the trend in all the key economic statistics that are giving investors insights on what's actually happening in the economy and corporate profits. So, we can sit here and spend the next 20 minutes listing everything that we look at on a weekly and monthly basis. But all the key economic indicators that sort of either feed into GDP or give investors insights on where GDP is likely to be on a trend basis are the kinds of indicators that we watch. So we typically don't really focus too much on GDP specifically, because by the time we get the GDP data, all the information that's contained in the GDP data has already been reported, intra-quarter, intra-month, vis-a-vis these sort of more high-frequency measures of growth. Starting with the leading indicators that are survey-based, like PMIs, confidence readings. You also have hard data indicators like retail sales, personal consumption expenditures, et cetera. So there's a lot of information. It seems like you're new to our process. So by this time next month, you will have seen us unpack all that information every day in our leadoff morning note, every week in our Around the Horn, and obviously a deep dive on all that information in our macro scouting report. So sit tight. You're going to get a good chance to think about how we think about growth, productivity, all that good stuff. And then lastly, with respect to liquidity, we think about U.S. liquidity in two respects. One, in the context of what's happening with a monetary policy from the perspective of the liquidity that it's sending. One with respect to the interplay between Fed policy and U.S. Treasury policy vis-a-vis our 42 macro net liquidity model. That's the Fed's balance sheet, the total assets there minus the Treasury general account balance minus reverse repo facility balance. I assume you've probably heard that before. That's become quite popular on global Wall Street, thanks to our research. And then we also think about it from the perspective of the Treasury's net issuance plans. Whether that they're dumping coupons or bonds onto the market, and what's the composition of those coupons are in terms of bonds versus non-bonds. And that's helps us understand, the kind of likely impact of the Treasury on market liquidity. There's other ways in which we measure liquidity as well, thinking about things like the BTFP, the Bank Term Funding Program, all that other stuff when it becomes relevant for asset markets. But generally speaking, when we think about U.S. liquidity, it's in the context of what the Fed's doing with the Treasury, and what the Treasury is doing in the context of its net issuance. So we'll wrap it up there. Darius Dale presenting our macro minute for Monday, February 5th, 2024. Best of luck out there today. Everyone have a great week, and we'll catch you back here tomorrow. Cheers.